Hello, welcome back. So Intel was actually down yesterday after announcing a slash in their dividends. And obviously this is pretty big news. In the previous videos I've made about Intel, I have always been talking about this point. So while I like the company a lot in terms of its financials, the dividend is a problem because they had a very high payout ratio compared to the free cash flow that they are generating lately. And so I mentioned that it is very possible that you're going to see a dividend cut. Now, this has two things to consider here. There are two things to consider. The first thing, which is very important, is the fact that now Intel will be able to use this cash flow that they were actually sending to shareholders for growing themselves. And so they kind of go back to a little bit of a growing phase because they don't have to extract all that cash flow to give it back to investors. The other thing is that for current investors, this is not great because when this kind of dividend cut happens, typically you see the stock falling for a little while. Now, I do anticipate that it's possible the stock will go down a little bit more. Now, it has been battered so much in the previous sessions, the past few sessions, I would say past many sessions, that you could still see the stock go down just a little bit, again, just because it has been going down a lot, and you can kind of see it here. So maybe there's not just much left to go down compared to the value that the company has. But in this video, we're going to be examining what happened, what kind of dividend slash has happened. We're going to be taking a little bit of a look at the dividends, what the kind of dividends Intel has been paying and what the dividend is going to be moving forward. And also we're going to examine the financials and the free cash flow model for the company. Just see what the discounted cash flow points based on the company's future, pretty much, based on what they are going to be doing in the future. Now, the first thing that I want to take a look at is obviously the fact here, the fact that Intel drops the dividend bombshell, which we were kind of expecting. And after this dividend cut, I'm getting a little bit more interested in Intel, I have to say. I haven't bought it yet, but I was kind of waiting for a potential for the dividend to be slashed. And this becomes way more appetizing right now. Now, they cut their dividend by 2/3, as you'll see here in this article. Now, the article says, "We told you so." And the dividend slash was 66% to 0.125 per share or 0.5 per year. And it used to be, I believe, 0.35 or something of that sort. We're going to examine that. Now, the actual numbers, you can kind of see it here in our dividends module, here in our tool, for which anybody, all of our patrons have access to, by the way. And you can find a link in the description box below this video if you're interested in becoming a patron and getting full access to our tool. Now, the dividend yield, the previous dividend yield, pretty much was 5.7. Now, when the new one arrives, we're going to be seeing something like 0.123 over here. So this is going to be going down. And this is a 66% cut, which means that we're going back down to about 2% dividend yield a year, that is. So this is a significant cut, but this will actually free some of the free cash flow that the company desperately requires right now. We do know that they have been spending a ton in capital expenditures also, and also their operating cash flow has been going down lately, which is a big problem. And this is the core reason why they had to actually slash the dividends. Now let's take a little bit of a first pass here at our metrics page, just to see what is happening with the core financials. Now, the PE ratio is, generally speaking, going down lately. Now, it's going up and down a little bit because the company has been having troubles with net income and their free cash flow. Now, for instance, the free cash flow lately has been getting into negative territory, as you'll see here, basically losing some money. But the company has been also buying back shares, which is, generally speaking, a good thing to see. But you do want the company to be generating a lot of free cash flow before they do that. And lately, Intel hasn't been doing that, so things have been going a little bit south for the company. Now, the revenue growth, again, you'll see it going down. They did have, again, we know about this, their few past quarters, a couple, 2 or 3 quarters, have been terrible. Their earnings reports were horrible, frankly, so the company was going down and down. And you can kind of see it reflected here. Their revenue has gone down significantly. Now, for past investors, obviously, that's not a great thing. But for new investors, again, remember we're talking about a blue chip company here, and these kinds of headwinds are very likely that they're going to be surpassed. Now, will the company arrive where it was a few years ago? I think so, but even if they don't, I do anticipate that they will continue growing nicely. And having a little bit of a stalling action here, it may be very beneficial for new investors. Now, the same thing with the net income growth going down, the free cash flow getting into negative territory. There has been a little bit of a disaster here for Intel. And again, things that we know about. Now, the margins for the company, the net income margins also have been going down quite tremendously here. And you can kind of see it, the dividend yield 5.6%, the free cash flow has been negative. The payout ratio in terms of their net income, which was positive, was very high. And you would kind of expect this dividend cut. So this will actually free up quite a lot of free cash flow again. Now, the financial statements, let's take a look at the income statement. You can kind of see the story here for the latest fiscal year. The revenue, generally speaking, for the company has been going up, but not tremendously. And then they had a huge dip over here, the sort of like the COVID years. The company has been having troubles, a lot of troubles, frankly, and kind of staying behind when compared to competition. So this is a problem here. But again, as a new investor potentially coming in here, remember, this is Intel. It's not like a new company that is going to be struggling for a long time. I wouldn't think so. And so they can easily go back to what they were doing before that. Now, will they continue growing at a nice pace? That's to be seen. But it may be worthwhile taking advantage of this drop, this recent drop here. Now, the net income from 21 billion, again, 21, 20, 19.8, so basically 20 and then 8. So a precipitous decline over here. Again, past year has been a disaster here for the company. Now, the balance sheet, you can kind of see that the liabilities of the company are sitting at about 78 billion, a quite substantial amount, yet their total equity is at $101 billion. And remember, they have been buying back some shares too. So, balance sheet looking comfortable, generally speaking, over here. Now, the cash flow statement of the company, again, the net income has been going down, and this affects the operating cash flow, as you can understand. A significant decline, almost 50% from the previous fiscal year. Again, you can kind of see here going down and down. And when this happens and the company has a lot of capital expenditures, we do know